Is Google outperforming Meta and Amazon in recent earning calls? Today, we're diving into Google's latest earnings report from February 4th. And same as our last video, we'll be comparing it with its peer stocks, Meta and Amazon. Meta released their earnings on January 29th, and Amazon followed up on February 6th. We'll analyze all three earnings together to uncover any positive or negative sentiments from the calls. All right, let's head over to AlphastockAI.com. Just like we've done before, we'll input Google's ticker symbol. Select Meta from the suggested peer ticker list, and then search for Amazon as another peer stock to compare. Once that's set, you are good to go. Let's hit the Analyze button. If this is your first time logging into AlphaStock AI, take a moment to explore. There's a ton of free data available on any stocks and ETF. If you're a premium member, you get exclusive access to our AI-powered engine's investment suggestions, trading strategies combining both fundamental and technical insights. Since today we're focusing on earnings, we'll click on the Earnings in the menu button. Here, AlphaStock AI provides the full original earnings transcripts for each company. You can read through them to get a sense of the tone and sentiment from each call. If you don't have time to read through the full transcripts for every company, no worries. Our AI engine can quickly analyze the earnings reports and deliver strategic insights, sentiment analysis, and investment recommendations, all with just one click. This is a huge time saver, especially if you're looking to study multiple stocks in one go. If you want to dive into the peer stock earnings, it's super easy. Just click on the ticker name from the list and hit the AI Insight button. Let's get started and see how Google stacks up against Meta and Amazon in their latest earnings calls. I have put the AI summarized earning reports from Google, Meta, and Amazon together, and let's dive into the earnings of the three tech giants. We'll compare their performance, growth strategies, and see which stock deserves a spot in your portfolio. Let's get into it. Let's kick things off with revenue because who doesn't love big numbers? Amazon takes the crown here with a massive $187.8 billion in Q4 revenue, up 10% year over year. But don't count out Alphabet just yet. They reported $96.5 billion, a solid 12% increase from last year. And while Meta might be trailing in total revenue at $48.4 billion, they flexed the highest growth rate at 21%. So, if you're all about that revenue growth, Meta is definitely stealing the spotlight. Now, revenue is great, but let's talk profit margins because that's where the magic happens. Meta absolutely dominates here with a jaw-dropping 48% operating margin. Alphabet isn't far behind, boasting a strong 32% margin. Meanwhile, Amazon is trailing with an 11% margin. But don't forget, Amazon's lower margin reflects its heavy investments in logistics and retail infrastructure, while Meta and Alphabet benefit from their high-margin ad businesses. Now, let's dive into the future, AI and cloud services. All three companies are racing for dominance here. Google Cloud revenue surged 30% to $12 billion, powered by AI innovations like Gemini 2.0. Amazon's AWS remains the heavyweight champion, pulling in $28.8 billion, up 19% year over year, with a strong focus on generative AI and custom AI chips. Meta, on the other hand, is making waves with Llama 4, their open source AI model, and plans to reach over a billion AI users. So who's leading in the AI and cloud race? Amazon has the size, Alphabet has the rapid growth, and Meta is betting big on AI engagement. Advertising revenue is another key battleground. Alphabet's YouTube ad revenue rose 14%, boosted by US president election spending. Amazon's ad segment grew 18%, hitting $17.3 billion, showing that their ad business is becoming a serious contender. But Meta takes the cake here too, with a 21% year-over-year increase in ad revenue, driven by platforms like Instagram and the growing Threads community. Now let's talk cash flow. Who has the deepest pockets? Google's free cash flow for 2024 hit an impressive $72.8 billion. Amazon generated $36.2 billion in free cash flow, while Meta, despite smaller revenue, produced a strong $13.2 billion and is sitting on a mountain of $77.8 billion in cash and marketable securities. That's a lot of dry powder for future investments. So, where are these companies headed? Google is doubling down on AI, quantum computing, and cloud infrastructure. Meta is pushing hard into AI-driven social platforms and augmented reality, with products like Ray-Ban Meta AI glasses leading the charge. Amazon is enhancing retail efficiency with robotics and expanding AWS AI capabilities. Now the big question, which stock should you buy? If you believe in the future of AI and cloud services, Google is your pick. Their rapid growth in these sectors, combined with solid financials, makes them a strong contender. If you're excited about AI-driven social innovation and high profit margins, Meta is the one to watch. Their aggressive AI strategy and robust ad revenue growth position them well for long-term gains. If you're looking for diversified revenue streams and dominance in e-commerce and cloud, Amazon is your go-to. While their margins are thinner, their consistent revenue and strategic investments in AI and logistics make them a reliable choice. So, who wins this tech showdown? Honestly, all three are strong buys. It really comes down to your risk appetite and where you see the future heading: AI and cloud with Google, social innovation with Meta, or e-commerce dominance with Amazon. That's it for today's breakdown. Which stock are you betting on? If you have a favorite stock you'd like me to analyze, drop the name in the comments below, and I'll cover it in a future video. Thanks for watching. See you next time.